What's up,
Hey, what's
y'all?
up, guys?
We're back with another training video, and I'm excited because in this video, we're going to talk to you about 3 tips to help you protect your trading capital.
Let's make it happen.
All right, so the very first tip that we want to talk to you about is not risking more than 1 to 2% of your total account balance. Interestingly, we had a coaching session with a trader today, and he showed us some mistakes that he had been making in his live account, and he was risking like 2 to 3% per trade, and he was opening up about 5, 7 trades at a time. And he just didn't realize that that was a mistake that he was making. And these are things that we're not really properly taught, especially if you don't go through a structured education program. So we
Yep,
just did an in-depth risk management, some risk management tutorials for our academy. And we thought that we'd share this because it's just so extremely important.
absolutely. And I find many people do not even know what to risk, if anything. They just put in a trade, hope it goes their way. They're in, and then they're out. And
Mm-hmm.
oftentimes they like to hold trades too without a proper stop loss or any plan in place.
Right, which is you do not want to do that. So let me show you really quickly what we do and a tool that we use to help us. You should probably know about this. A lot of traders don't, some do, but we use a position calculator. So if you Google my FX position calculator, you'll find this. And all you simply have to do every single day before you start trading is you're going to type in your account balance. So for example, I'm going to give you an example, and then I'm going to break down the other 2 tips. So for example, if you had a $5,000 account balance, you don't want to risk, if you want to live to trade another day, you don't want to risk having, 10% on each trade. You want to risk no more than 1 to 2% of your total account balance if you do not want to wipe out your account. So you simply are going to put 5,000 here in your account size, put 1 to 2%, 1 or 2% here on the calculator. And then let's say we're doing a swing trade. So I usually use about 150 to 200 pip stop on a swing trade. And I'll show you what my strategy is with that. And so let's say we're trading, let's see, I have AUD USD. So I'm just going to pull that up. Let's put AUD USD, and then you're going to calculate it. And now it's telling me that this is my daily max risk. So if I trade today, the most that I can lose is $100. After I lose $100, I'm done. I can't trade anymore. And my lot size should be no higher than 67 cents, okay? So now I'm gonna go to the chart, and let's assume, actually, I'm sorry, not AUD USD. Let's just assume we're gonna trade CHF because I have this charted out. So we're on the daily, and let's say that we're looking for a trading opportunity. Let's say that we got a trading opportunity here at this structure level, and we're gonna enter for, let's say, instead of doing 67 cents, you don't wanna go all out and be greedy. So this will be our step 2,
Yep.
which is proper position
Proper position
sizing.
sizing. Yep.
Okay. So number 1, you're not going to risk more than 1 to 2% of your account. Number 2, proper position sizing. And we both are pretty good at this, and we hold each other accountable. That's why I love
Yep.
having him as my trading partner. But so instead of going all out for it, what we do is Brian and I will break up our lot sizes into fractional lot sizes. We do this when scalping, also when swing trading. So instead of entering this zone here at 67 cents, let's say I'm going to enter it at, maybe I'll do 20 cents, okay? So I'm going to enter this zone here at 20 cents a pip. So I'll just say 20-cent lot size. And remember, my daily max risk is $100. So I'm going to get in here for a sale. Now, I usually will measure, well, where do I want to place my stop loss? So I'm very strategic with my stop losses. I always place my stop loss away from structure levels. So let's say I can even go to the weekly since I'm on the daily, and I can just kind of look at where I would want to place my stop. So if I'm looking at these structure levels here, I am going to measure from here. And I usually like to do about 150 pip stop on a swing trade. But with this, I think I'd be good at like 80 pips, okay? So let's say if I do 80 pips, where's my calculator? So this is how I do it. So you don't have to be a math magician to do this, but I would take my 20 cents and I will multiply that by 80, and that's simply $16, okay? So if I were to go negative and hit a stop loss at this zone of 80 pips, I would be negative $16. That's how much I'm willing to lose, right? Well, let's say that, so I have an 80 pip stop loss. However, let's say that I want to take profit. So if I'm going to get in here, let's say that I want to take profit at around maybe even right here. So I'm going to move my take profit to about right there, right at the bottom of, that would be at the bottom of our channel or near our trend line. So that would be, let's see how many pips. So from here to here, that would be about 100 pips. So that's pretty good. That's not bad. Okay. So we'd be making more than what we'd be losing. So, and realize that because I only used a 20-cent lot size, I didn't use 67 cents. I still have a lot of room to leverage the market. So,
and you have more trades to go about. So you can use this trade. If you lose this trade, you're only risking $16, and then you have more time you can put in the trade.
So if you want to go trade more during the day, you can, because you haven't hit your daily max risk.
Yep.
You can also do this. Let's say if you got in, let's go back down to the daily. And let's say if you, let's say, because we don't always get the best entries, right? So let's say if you thought the market was going to turn around maybe right here and it pushed up, because you can see that it actually did push up to about here. So let me turn this to red, because this means that these are our sell zones. So instead of doing 20 cents, this is another thing of what we do. We do, okay, maybe I'll enter right here for 10 cents a pip. So 10-cent lot size. And then if let's say if I don't get the best entry and price does push up to this next reversal zone, that's only about 65 pips. Okay. So that's only like $6, a little over $6 that I would be negative. And what I'll do is I'm going to plan a second entry around this zone.
Yep.
So you're going to do 20-cent lot size. Okay. So you have to think very strategically when you are planning out your risk. And if you have not mastered risk management, make that your first priority, because when Brian and I really decided to buckle down and master risk management, our trading went to a whole nother level.
Right.
Like, I know people look at our Telegram and wonder, do they ever hit stop losses? Because we handle stop losses very well, but we rarely ever do hit them, honestly. When we take losses, we're intentionally taking them because we don't have to wait to hit a stop. And I'll go into that much later. But anyway, with this method, using proper position sizing, this is going to allow you to leverage the market. You're not stressed out when you're trading. And also too, you're living to trade another day. Okay. You have to master to do that. So this is what we teach in our academy and break it down with a lot of different examples. The third thing is, a lot of traders are not taught this, but it's wise to move your stop loss into profit after, or into break even after you're in profit.
Right.
So let's say, for example, let's say Brian is going to open a trade here. He's going to get into a sell. And let's say he plans to take profit at that yellow zone. Okay. So let's see how many pips that is total. So from this yellow zone to this sell, that's about 100 pips. So what Brian is going to do, he enters the market at 114.56. And what we have as a rule in our trading plan, depending on if we're scalping or if well, it's usually with swing trading, because we don't do this with scalping. But once we get about 30 pips in profit, 30 to 40 pips, we like to move our stop loss into break even, or what we call just moving your stop into profit.
Right.
Okay, very basic principle. And what that means is, if you enter at 114.56 for a sell, you're simply going to move your stop loss. Instead of having your stop loss now at 150 pips, now that you're in profit, you're going to move it 1 pip or maybe 2 pips past your entry price. So it will be 114. Let's say 54. Okay, so you're simply going to move it down. So your stop loss will be, let's say, right about just move it up just a little bit. So now what's going to happen, I'm going to turn that to white. So now what's going to happen is that as price starts to go in the direction that you intended to go in, so let's say you get into a trade for a sale, it's going your way. Now let's say you're 40 pips in profit, you're simply going to go to your trading platform, modify your trade, and instead of your stop loss being way up here, you're going to change it to 114.49. So now what happens? So you want to explain?
Now it's a risk-free trade. So if for some reason price goes against you and starts to reverse and it gets you out, you still profited. So regardless of what's going on, you're going to still profit. So that's one of the beauties of understanding this. And we teach this every single week, once a week in our BK Forex Academy during live trading. And we show it ourselves that you can enter into a risk-free trade if you know what you're doing. So,
and you have to make it intentional. It has to be in your trading plan. It should be a part of your exit strategy. A lot of traders don't know how to enter the market confidently, how to take profit, how to exit the market. And it's really from mastering basic fundamentals. This is why you must find a program or a structured program that is based on getting your results, that has the mentorship and coaching to help you learn price action, not just rely on signals. So this is what you need. So to sum it up, these are the 3 things that we just wanted to share with you in terms of protecting your capital, because you've got to make that your number 1 priority. So 1 is not risking more than 1 to 2% of your total account. Number 2,
proper position sizing.
And number 3,
adjust your stop loss. So move your stop loss.
Move your stop loss into profit. So guys, we hope that you find this helpful. Keep in mind that we are no longer with our previous company. We get a lot of questions about that. Thankfully, we've been blessed to open our own academy. And so you can find a lot of our resources in the description of this video. Comment on this video if you have any questions. Let us know. What do you struggle with when it comes to risk management? And how are you overcoming that? Or how are you not overcoming it? And what would you like help with? Because we're more than happy to share. So thanks for watching. We'll see you in the next training. And you all be blessed.
Take care.